Happy MoviePass Wednesday. I have a financial update on MoviePass, and more specifically, Helios and Matheson, which is the analytics company that owns 91.8% of MoviePass. So it is the publicly traded way to buy MoviePass into the MoviePass story. And I definitely do not want to talk about the stock so much because I got a request back on Monday. Someone said, hey, do a piece on HMNY, which is a ticker symbol for Helios and Matheson. And I didn't want to do it because, first of all, I don't want to give buy-sell advice. And if I do, through a video, you have real problems if you're getting your financial advice from a YouTube video. So please don't ever do that. Don't ever say, I saw this on a YouTube video, so I'm going to buy or sell this stock. Find other means, more established financial media, and learn to do a little research before you buy or sell. Don't just say, well, I saw it on this video, so I'm going to do that. So I don't want to lead anyone in that direction. I'm going to talk about it because, first of all, Tuesday night, we did get the 10Q, which is the company's quarterly report. It's their first quarterly report, the first time we've had a look at how the first 3 months of this year actually went for Helios and Matheson. We had the annual report at the end of December, but that only covered a little bit since they acquired MoviePass, controlling stake, finished acquisition in mid-December. So it was just a very small part of that year was actually MoviePass. These 3 months have been all MoviePass, and now we're up to like 92% of MoviePass. It's a great proxy for the MoviePass service. We can actually look at it that way. And second of all, the ownership of Helios and Matheson is now becoming a story. It's the cult of MoviePass as far as stock ownership. This morning, Wednesday morning, the Wall Street Journal ran a story about people owning the stock and enjoying the service. Bloomberg this morning also had a story again about how people are. This is the lead. Let's actually talk about this. Bloomberg lead is brilliant, and it's where I'm going to repeat it. Credit to Kyle Stork or Stock. I don't know what his name is. Amazing lead. Hannah Wolf became a MoviePass Incorporated member, hit the pricey theaters of New York, and began doing her part to drive the company out of business. So, of course, you can already tell by that it's going to be sort of a cynical approach to people that are like, driving the company out of business. In the Wall Street Journal case, you have people that have invested and they've lost more money in the investments and they're gaining in the value of MoviePass. So it's not necessarily in a very approving, loving manner, but it is sort of describing a situation that is a lot of us today. MoviePass fans that are saying, can we help? Oh, we should buy stock. That'll help. So I want to address that particular aspect of the intentions, of these noble intentions. So MoviePass chatter, yes, I'm watching you, Facebook group. Let's talk about this because the last couple of days have been filled up with people sharing Robinhood links. Robinhood is a discount broker where you can buy shares relatively cheap, and it's sort of like it's like brokerage for, I guess, the millennials. But anyone can open an account there. No minimums, very easy way to go in and buy stocks. But a lot of people there are coming in and they're buying stocks and saying, oh, I bought my 32 shares, I bought my 100 shares, I bought my 12 shares. And the intentions may seem great, but it has the feel of sort of like a GoFundMe campaign that a bunch of people get together to help their classmate Billy get a new business model transplant. And that's not the way the stock market works. Unless you're buying tens of millions of shares, you're probably not buying more stock faster than Helios and Matheson is printing them right now. So keep in mind that that's not necessarily offsetting. You're plugging a leak with a finger when it's actually the whole roof. That's a sunroof at this point. But and also, more importantly, the money that you are sending in buying these shares, it's not going to Helios and Matheson. You're not kicking it into some kind of bucket, donation bucket, or an offering basket. It's going to the person selling you the stocks, the person who gave up. So while you are having faith in this company, you're buying it from someone who has lost faith in the company. That's how the buying and selling of stocks work. When you will sell it to someone who will think that they will probably be sending money to MoviePass when they're actually just sending it to you to get out. So it's how things work, but this is not a bake sale fundraiser, is I guess the moral of the story. It's not something we're all just going to get together and save, MoviePass this way. So again, this video is not about buy or sell advice. I don't want to go down that road, but it's important to look over some of the financials that happened here so you can understand where MoviePass is and what the limitations of the model and what it can do work well. So keep in mind that this is a cautionary tale sort of about stock ownership on the fly. If MoviePass is around in a year or 2, even 3 years from now, it doesn't mean that all of the shareholders will have made out like bandits. It may be. And again, there's always the case, and I'll talk about it later, Sirius Xm radio, which traded for about a nickel back in 2009. It traded for 5 cents a share. And it's been 100 baggers since then. But that's more the exception to the rule. More often than not, a lot of the penny stocks wind up going away. So let's talk about dilution, the first thing. So one thing that's happening here is that MoviePass, and Helios and Matheson specifically, is putting out a lot of new shares to raise money, to make their acquisitions, to just stay afloat. So this is a company that had less than 6 million shares a year ago. At the end of March of last year, they had less than 6 million shares. Now, at the end of March, they're up to 49.6 million shares. And keep in mind that if you look at the quarterly statement, if you look this up, let's say on Yahoo Finance or any other financial portal, you'll see that the shares outstanding are less than 49.6 million. That's because it's a weighted number between January and the end of March, so it's like the average it would have been at that point. Trust me, according to the SEC filing, the balance at the end of March was 49.6 million shares. Add to that a lot. First of all, you had the 11 million shares in April, so after the quarter ended, that they had to pay when they were raising $30 million through Canaccord in that secondary offering. You also have the stock that they offered MoviePhone. They paid $1 million in cash for MoviePhone, plus another 2.5 million shares, and another 2.5 million warrants. The warrants are at much higher prices than the stock is now, so it's not a concern, but it's something that you may want to keep in mind. More importantly, there's another 68.2 million stock options out there that have yet to been granted and not been exercised necessarily, and more than half of that have actually been issued through the first 3 months of this year. So there are a lot of shares out there, and a lot of shares that will be out there. So it's not as if you are going to be sharing your wealth with how many people you think you are. It's a lot of people, which drives down the market, well, increases the market cap, but the price per share, that's what dilution is. It's actually divided your stake, your percentage ownership in the company gets smaller on a percentage basis every time that Helios and Matheson issue more and more stock. So let's talk about bankruptcy reorganization, which is one thing that I know nobody wants to talk about, but let's be real here. First of all, if MoviePass is in business a year, 2, 3 years from now, it doesn't mean that they didn't file for bankruptcy. You can file for bankruptcy reorganization. There's a difference between Chapter 7 and Chapter 11. There's a difference between reorganization and liquidation. And a lot of companies, they publicly traded companies, they'll file for bankruptcy reorganization because they just have more debt than they can pay. And the companies stay around. Toys R Us is liquidating now, but it wasn't the case years ago when they were first starting to buckle. So you have cases where the creditors, if a company files for bankruptcy reorganization, a shareholder may wind up losing all their value in a bankruptcy reorganization because they're at the end of all the creditors get their first picks. And sometimes there's a new offering which completely sidesteps the existing shareholders. So keep in mind, if Helios and Matheson files for bankruptcy, it does not mean the end of MoviePass, but it may mean the end of you as an investor in Helios and the creditors are basically going to get the company, is what I'm trying to say. So no matter how cheap the stock is, again, this is not buy or sell advice. It's just bracing you for the reality that if a company goes bankrupt, odds are you're probably going to be at zero unless there's somehow more assets and liabilities, and we know that's not going to be the case here. No matter how low the price is, a stock going to zero is a 100% loss no matter where your starting line was. So let's talk about Sirius Xm, which was a happy story. Sirius Xm is a company that I was following back during its rough times, and the stock sold for a nickel. It was trading for a nickel in early 2009. And this is a company that basically before that they were saying, all right, we're a week away from filing for bankruptcy. Two companies were fighting for sort of getting the ownership of the company, but the investors were pretty much said, all right, it's going to go bankrupt, and then these people are going to fight for us. What saved Sirius Xm and what may save Helios and Matheson and MoviePass is that someone with a lot of money said, all right, I'm going to provide you. And in this case, Sirius Xm got an infusion of $580 million from Liberty Media. And they said, all right, we're going to do this, but we're not giving this to you. This is actually a loan that you have to pay back at 15% interest. So it's 15% interest, very high given the credit risk. And you had to give us 40% of the company. So Sirius Xm, again, highly dilutive deal, but it worked out for them because clearly even though the shares have exploded since then through many other reasons, Sirius Xm is there. But the difference between Sirius Xm and MoviePass as a model is that while Sirius Xm was at the ropes, they just acquired, Sirius and XM had just merged a few months earlier. They got the feds to agree on the merger, the antitrust regulatory stuff. The issue there was that they just didn't have enough money. The freedom, they were exasperated. They were running out of money. They were losing money at the time. Thankfully for them, there was a light at the end of the tunnel. They were profitable a year later, and they've been profitable ever since. MoviePass does not have that kind of visibility. And that's the problem, that MoviePass a year from now is not going to be profitable unless many things happen, and we all know that. And here's why we can now dive into the numbers. So if you're going to look up this 10Q filing, and it's basically, it's an important reading for anyone that owns the stock, I guess. but I'm just going to hit go to page 29, which is when they actually break down the actual subscription model, the money behind it. So basically, they made $47.2 million in subscription revenue for the first 3 months of this year. And if you divide that by $9.95 a month, you get 1.6 million subscribers. And right away, you're saying, no, that can't be. They had, by early February, they had 2 million subscribers. At the end of December, they had 1 million. So no way did they have 1.6 million members at the end of March. That's not what this means. First of all, a lot of people are paying a lot, not a lot, but there are people paying a lot less than $9.95. The people that got it on annual plans, the people that are in on some quarterly plans, some other factors, some of the promotions. So there's that. And this is also, again, this is a weighted figure. This is how it is. They made 47.2 million. They don't break it down month by month, but I'm pretty sure they made more than a third of that in March, and they made less than a third of that in January. So don't freak out, but just know in your head, all right, they made 47.2 million in subscription revenue, which is a decent number, and it breaks out to about 1.6 million people paying $9.95 for 3 months. We know that's not technically what happened because the company's growing quickly in that time. It started out with a lot less than 1.6 million. It ended with a lot more than 1.6 million, but that is the average. Then we get to 1.4 million in marketing and promotion revenue. And this is important because this is where the model is supposed to be. I mean, there's the data selling side, but they're supposed to offset the loss by going in and making money by promoting and promoting movies and marketing things and making money that way. 1.4 million is not a lot. And if you break it down by, let's say, the 1.6 million subscribers, it's less than $1 per person over the course of the 3 months. So we're talking about 30 cents every month in revenue per member that MoviePass is making in advertising and marketing and in promotion activities. So right away, that's not very encouraging. And then we get to the next line item, 135.3 million in cost of revenue. And this is important because this is how we get to gross profit. And I don't expect you to be a business major or an MBA to figure this out. But just know the cost of revenue and gross profit is basically how much you pay for the product. So if you are Chipotle, let's say, and you're selling a burrito, your gross profit isn't the kind of money you make at the end of the day. It's how much you make relative to what you sell. So if all the parts that went into a burrito cost $2, $3, let's say $2, and you sold it for $7, you made a $5 gross profit. Then you go to the labor and expenses and rent and all these other things. But for gross profit, it's just the actual cost of the raw materials. So in this case, this 135.3 million in cost of revenue is basically how much they are paying movie theaters. So you take the 135.3 million, divide that by the 47.2 million in subscription revenue, and you come up to basically about 2.9 times. So they're paying 2.9 times in tickets sales than they are generating in subscriptions for it. So this is why it's such a great deal for you, for me, for any of the 2 million plus MoviePass members, because we're getting more financial value than the financial value we're putting in on average. And clearly people are spending a lot more. Some people are seeing less than a movie, but on average, this is why the model is seemingly out of whack with what can work. And this is through the first 3 months of the year. So, and then we get to 11.7 million in operating expenses. And this is where everything else comes from. So this is where the MoviePass executives, the employees, the customer service, this doesn't count the stock option. If you look at the actual operating loss for the whole company, it's much larger, like 21 million, but that includes about 5.8 million in stock options. That is not an actual physical expense, cash coming out of the company. This is 11.7 million, just the operating expenses to run the business. So this comes to a 98.3 loss from operations from the revenue, from the subscription revenue. So this is the MoviePass model, lost 98.3 million as an operating loss, or nearly $33 million a month. And this may not jibe with what you've been hearing about the, 20 million a month or something like that, but that was on a cash basis. This is more like a financial reported basis, which is not the same. If they're selling a lot of advanced annual subscriptions, it's not going to factor into this. This is more of just that money counts as deferred revenue, so it's not scored right away. But know that MoviePass itself is losing a lot of money, and it's going to need a lot of money to stay in business. So nowhere in this 42-page report is anything mentioned about the $300 million line of credit that Farnsworth told Variety that they had that would help fund them for another 17 months. This doesn't mean it doesn't exist, but the fact that, once again, it does not appear in any SEC filing, as I pointed out on Monday, it had not appeared in any SEC filing before, and it's not appearing in this one, makes you wonder, all right, until I see them access this money, I'm going to be skeptical, because A line of credit is a lot better right now than issuing new stock because we've seen what this does to the stock. It kills it. So let's see what happens on that front. So again, this doesn't mean that MoviePass and Helios and Matheson are going out of business. It doesn't mean that someone's not going to step in and finance or acquire MoviePass the way we had with Liberty Media and Sirius Xm Radio. We know there are some companies that hate that, let's say they want, or at least they think they want, MoviePass dead. Not just AMC, a lot of MoviePass owners, a lot of other people that are trying to put out entertainment products out there, even the other subscription services, most of them multiplex owned and other stuff, that want MoviePass out. It's disrupting the value equilibrium, the perceived value of a night out at the movies. But there's also a lot of other companies that we don't know a lot about, have not been vocal about why they would appreciate a company closing in on 3 million subscribers and growing, of people that are just ravenous about their love for movies. So this does not have to end ugly, but a lot of things have to go right for it to end pretty. So there you have it, a blunt financial look at MoviePass. Keep enjoying it while it's still here. There's nothing in this annual report, this quarterly report, that makes you feel encouraged that this company is going to be around financially without a desperate need for an infusion of cash soon. And until we get that, I think the stock will probably be suppressed. But again, this is not buy or sell advice. Clearly, Helios and Matheson is a risky stock. Clearly, there have been a lot of risky stocks that have made amazing returns. I'm not going to tell you yes or no. It's not what this video is about. It's not what I'm going to do to you. But know, as a MoviePass member, even if you don't care about the stock, know that the viability of the company, financial viability, rests on what you're doing. And even though people buying stock is a nice, cool thing to see happening, it's misguided if you're not approaching this as a lottery ticket that will probably be cashed out worthless. But it could also be a massive payday if the numbers line up just right. And that's where we're at right now. So I hope this long and probably complicated update works for you. I hope everything's clear. I've tried to take some financial numbers and massage them in the way that makes sense. Quantifiable data that we can use as MoviePass members and MoviePass watchers and MoviePass. I'm not going to say cheerleaders because clearly I'm skeptical about the model, though I want it to survive. I want this YouTube series to survive. But there's a lot of things happening right now with MoviePass, and hopefully the company works it out, and we'll see. Because there's a lot of things happening right now, a lot of moving parts. And yeah, I'll see you Monday, but who knows if something even more exciting will happen between now and then for me to talk about. Till then, this is MoviePass. Subscribe to my channel if you have not yet. I have about 15,000 subscribers subscribed to me over the years. And this is a series that clearly I'm committed to right now, to getting off the ground and getting running. Subscribe to it so you actually get these things delivered and have notifications so you see when the new videos show up. You never know when something cool news might come out, and I'll be maybe the first one to tell you. I won't be breaking inside news, but just information that I find. So we'll see you next Monday, and if we see you before that, hopefully it's for good news, not bad. MoviePass, Moon Pies, out.